Good morning, everybody. Coming to you live from Costa Rica. This is my new house. My nice little view of the ocean there. One of the benefits of trading, or I guess any internet-based business, is that you get to live wherever you want. And I'm living in Costa Rica for now, anyway. So welcome to the show. This is high probability short-term trades. We just pulled off another winner last week for 12 straight wins. We're doing really well, obviously, and that's the nature of this game we play. We take a little bit of money, and we take it most of the time, and those little wins stack up to great effect during a month. So today we're going to take a look at the markets. There's some news going on with the Fed president speaking today. So you want to look at, just get a general feel for where the market's headed. That's important, maybe not so important for us, but it's always good to have a feel of where things are going in a general sense. We're going to talk about my Sniper guidebook giveaway. We'll look at the last week's trade. We got this week's trade on jeans, hint, hint. And then if you have any stocks you'd like for me to look at, please post them down below here in the chat box. And I'd be very happy to take a look at what you're looking at. And I've got a couple of other stocks on my list that I can share as well. So let's trade. This is live trading. In about 8 minutes, we're going to be placing a live trade. So let me get started just really quickly. Quick overview of the markets. This is a chart of the SPYs. We call them the SPYs. This is an ETF that tracks the S&P 500. And you don't need me to tell you we're in a bullish trend. You can see a series of higher highs, higher lows. I can use the Cool Hub software here to generate and show you graphically what's really bullish about this market. Just connecting these lows here and then connecting the highs. And you can see just a really beautiful bullish trend. Now, what's the fly in the ointment potentially is, the markets are waiting and pining for rate cuts. And during the most recent Fed meeting, it was sort of forecasted that maybe we're going to get 3 rate cuts by the end of the year. And so that's what markets are pining for and expecting. However, today, you can pull up this graphic here, Ryan. Today, we have a plethora of Fed presidents and a Fed governor speaking today. And these are potential landmines. If one or more of the governors or Fed comes out or presidents come out and say, I think it's going to be 1 rate cut or maybe not till next year. And God forbid they mention lifting rates at this stage. So expect volatility today, perhaps. I think it'll be a non-event. I think the writing's on the wall. The Fed meets the last day of this month and the first day of May. And we'll get some kind of indication about maybe in June, we get our first rate cut. We'll have to wait and see, of course. But all of that said, I'm not too worried about the direction of the market. We're opportunistic. We look for really high probability profits, and we snipe them, just like a sniper in wartime. We snipe them from, let's call it, a safe distance. Check out this trade we did last week on Walgreens. All right, so let me take you to the day we entered. I'm using this other piece of software I like called Tom's Tools, and I live in these tools. I like to show pictures of my trades, and we use pictures called risk graphs. And so on the 28th, this is the last week we were together, Walgreens came out with bad earnings. Now, it doesn't look like it here because the stock actually rose, but we got in when the stock opened here right in the early part of the day. And we were expecting the stock to stay below 23. Let me show you a live stock chart of Walgreens right here in the Hub software. Let me go ahead and pull down my watch list. This is really nice software. If you're interested, you can reach out to Hub, but I really love it. Here's Walgreens. And, this was the day we entered. And I knew this 50-day average was here. That's the red line. And we got the stock opened right about there, and we got in, and the stock rose, hit the 50-day average, and then fell out of bed. Now on the morning, we said, I want to get I want a line in the sand at 23. So in the event that the stock bounced, which it did, it would have to move through this 50-day average, which is resistance, and 22, which was also resistance, and then 23, and then we might start losing some money. We would start losing money if the stock breached 23. So the trade was, I want to make money anywhere below 23. And obviously the stock fell away. And what we did to profit on this trade is we used what's called a credit spread. We sold on April 12. That was a 15-day trade at the time. We sold a 23 call. And again, that call strike corresponds with our line in the sand at 23. All right, so that's what we sold. And then we bought a higher call that cost money. The net credit we received in Thinkorswim's simulated environment was 13 cents. All right, now 13 cents isn't a lot of money, so we did it 5 times and generated $65 of potential credit. That's our max profit in this trade, and a risk of 435. You know, a max profit potential of 14.94%. So here's what happened. I'll take you through day by day. Let me show you this risk graph real quick here. All the profits are shown here in the risk graph, and there's your risk. The risk reward profile isn't pretty, but what makes it valuable to us is the probability of getting up here is small. And then when the stock started falling away, boom, next day, stock comes down hard. And we were within our exit rules on that day to buy the spread back for 10% of the original credit, netting 90% of the original credit. And in this case, we ended up taking the trade off on just a couple days later. We didn't get a fill on that day, but a few days later, we ended up pulling this trade off for a 13.8% profit in how many days? That was like not even a week. So that is the kind of trading we do. And this is our 12th straight winner. Typically, this system, when I say typically, I mean since July of 22, when we've been publishing these trades to general audiences, is we're operating at about a 90% win rate. Our average profits are over 10%, let's say 10% to be conservative, and the average hold time in the trade, 7 days. That's average. So imagine you took, I don't know, $500 and you made 10% on it in week 1. And then week 2, you took the same money, made 10% again, made 10% again with the same money, made 10% again with the same money. In a month, you can do the math, that's 40%. All right. So I say this because, you know, a lot of traders are like, 10% is not worth it. I want a double or even a triple. Those are great. Those are great, but you're going to lose more often on those high payoff trades. So this is really conservative and very meaningful when you start to consider that stacking up these short-term trades over a month and God forbid over a year, not God forbid, do it over a year, you're going to have a really amazing return on investment. So that's our 12th winning trade straight in a row. And I've got to stop talking about that because I'm going to jinx us. But suffice it to say that we're doing really well. And it's not just since we've been on the Hub channel here. It's been since we've been doing this for quite a long time. Now, what I'd like to do now before I take us to our live trade, market opens in a minute. Actually, let me do this way. Let's go to the live trade. And the live trade for today, I'll talk about the guide here in a minute. The live trade for today is on Levi's Strauss. Jeans, blue jeans. So Levi came out and blew out their earnings. They had an earnings beat and they lifted their future guidance. What? Yeah, man, that's the kind of stocks we like. And here's Levi. And post-market, it was trading right about here. And right now it's trading up around 20. And so what I believe is going to happen is that the stock will stay above 18. Now, could it drop from 20? Yeah. But the probability of it doing so, given that their earnings were good and they lifted their future guidance, they have an online and a local store presence, hard box, what is it called? A retail box, hard store presence as well. And they're doing well. They're doing really well. So I like 18. And so what I'm going to do here is construct a trade that makes money above 18. All right. To do that, what I want to do is this. I want to sell to open. The stock symbol is Levi. Sell to open the Levi April 19, 18 put. 18 put corresponds to my 18 line in the sand, which incidentally is resistance. Here it was resistance, and now it's support. And if it does drop, it's got a good shot of staying above 18. And just below it is the 50-day average. So this is a safe place to sell. And what I want to do now is take you to the rest of it. So then we're going to buy to open the 17 put underneath, and I want to grab 10 cents credit on this. All right, now in Thinkorswim, let me pull up Thinkorswim here. Sorry for the late start. We had a technical difficulty, probably related to me living in the jungle where the internet's not as good as it is in the city. And I already have the order in. So let me pull up Thinkorswim here. And we can take a look at the live trade that I have going here. This is one thing I forgot to restart, Ryan. I had to shut down my computer. Yeah. And again, while I'm pulling this up, if you have any stocks you're looking at, please pop them in the chat box. And we're going to go looking at your stocks as well. All right. So I've placed the order in Thinkorswim, and I placed it before the market opens. And I asked for 10 cents. Right now, there's nothing showing. So what I'm going to do now is go into the option chain and see how close I need to get. All right. It doesn't look like we have to get, if I go to the 19 strike, if I lift up my strike, my short strike or my line in the sand up to 19, I can see there's only 5 cents. I want at least 10% of the spread width. So this is a $1 spread. I need at least 10 cents. And I don't see it even at 19. If I go to 20, then I can kind of see it. It is there at 20. But the question is, well, do I want to step up that close to the heat? Well, no, I don't. I really don't. Let's see where Levi is trading right now. Let me refresh. I can see it here in Thinkorswim. Levi's trading at 21.42 as I speak. And that on this chart, refreshing my chart here, that on the chart is way up here. So, yeah, the question is, how close do I want to get? I could go to 20, but I'm just not super comfortable with that because we could get some pullback here. So what I'm going to do then is, let me turn on creator mode here so you can see better. Let me zoom in the software here. All right, so 19 is as close as I want to get. So here's what I'm going to do. I'm going to fish. I want to lift my line in the sand up here to 19. The stock's up here at 21. I'm not going to 20. I could, but I'm not. It's a little too close. I want to be conservative, and I'm going to let this trade come to me. So now I'm going to put an order in to sell. I'm going to do 5. I'll tell you why I'm doing 5 here in a minute. The Levi 19 puts, sell the 18s. Current mid price is 5 cents. It's not there right now. I'm going to count on the stock perhaps retracing a bit after the fervor in the morning, and maybe we catch it. And there's another adage that comes to my mind, which is let the trade come to you. Let the trade come to you. So I've repositioned the short strike a little bit higher, and I'm asking 10 cents. They only want to give me 5 cents. Well, I want 10. Give me 10 or give me nothing. And if the stock comes down a little bit, we have a good shot at grabbing 10 cents on a retracement on Levi. And, you know, after the first pop in the morning, it's quite common for the stock to move around a bit. So we're either going to get filled or we're not on Levi Strauss. Let me show you the resulting trade here. If you'd like to join me in this, please feel free. I'm not recommending that you trade real money, but this is the trade I'm after. All right. So we're going to sell to open the Levi April 19, 19 put by the 18 underneath, net credit 10 cents. And then once you're filled, you put a buyback order, GTC, good till cancel order to buy the spread back for 10% of the original credit. And that would be a penny. So as soon as you're filled, the next move, put on an order to close it down for 1 cent. So that's your profit stop. That happens automatically in the event that the spread devalues to 1 cent. You buy it back for a penny. You net $9 on 90 cents of risk, and that is 10%. And so that's what I want. That's my minimum credit that I go for. And I'm positioning this trade conservatively. I'm not going to step up too close. If you want to get really aggressive, you could go to 20. I won't do that. I'm either going to get it or I'm not. Okay, now another quick thing here. There's some math here, and I'll tell you how to learn this math here in a minute. But in the guidebook, which we're going to talk about here in a sec, it will show you how to calculate your potential return on investment based on the width of the spread. In our case, 19 minus 18 is 1. I want 10 cents credit, and then you can calculate the max risk of the spread by subtracting the credit from the width, leaving us 90 cents. So this is 90 cents of risk, and that's for 1 share controlled, or not, for 100 shares controlled, that's $90 of risk per contract, and you're making $10 of profit per contract. And then, of course, I don't need to go out and buy I'm not trying to make money to buy 2 Starbucks grande lattes for $10. I want to do more contracts. And so position sizing is really important as well. And what I do here is for the Hub channel is I set my position limit, my max risk in a trade, in other words, to $500. And that represents 2 to 3% of my total portfolio value. Okay, so if I did 5 contracts at $90 a contract, my max risk would be $450. All right, this is cardinal rule number 1 in trading: is you don't risk more than 2 to 3% of your portfolio in any given trade. All right, so please get this guidebook. The guidebook walks you through the 5 steps that I take here in front of you live every Thursday at 9:15 Eastern Standard Time. We do live trades. There's a lot of moving parts. It's kind of fast when the market opens. And so our hopes are that you take this free guide with every single thing I mentioned here and you read through it. It's pretty simple at the end of the day. Once you master it, you got me every Thursday at 9:15. And my hope is that many people grab this strategy and start generating some income in their own accounts. No guarantees, of course, but history tells us since July of 22, we've been knocking the cover off the ball. Actually not. We've been getting on base, generating runs or profits, currently at a 12 for 12. So grab the guidebook. It's free, and I think it's easy to read. I wrote it. I made it as simple as I could. And again, you'll learn more by being here every Thursday and trade live right here with Mikey. All right, Ryan, what do we have for student trades today? Any stocks people are looking at? Maybe we can put on another one before we close here.
Looking at it right now, and I don't see any quite yet, but I bet somebody's going to say something here in just a second.
Gerardo. Ryan, we have I have a community of people that are part of my community, and we had a challenge back in January, and it was basically go find your own. and 90% of the people, and a lot of them novices, and in fact, 90% of them made good money, in the
Nice.
10% range. And I'm on this mission at MWTC, Michael Wade Trade Coaching, to bring option trading, high probability option trading, to the masses. Because if you can generate this kind of money in a live account, it's life changing stuff. In fact, one of our guys, Tony, who lives in San Diego, he traded this for 2 months and took the money and went to Cyprus. So I got to be careful of making promises like that. But the reason I'm so confident is that people that have learned this system themselves are making good money. So that's why I'm doing this. And I've made my money. I live in Costa Rica. I'm doing well financially, and I want to share. And that's really the whole reason we're doing this.
Nice. Yeah. So we got a couple of tickers here. SLP.
SLP. Okay, let's check that out. SLP. Simulations Plus. Let's check it out here. Let's go into the hub software. Oh, wow. Why did I go, oh, wow? Well, look at this big move up here. And I love it because now the stock is above the 200-day average. Now, what's a little bit interesting to me as well is that the stock, let me draw some lines. This is not where we're going to sell, but right around 46 here. Can you see over here with resistance, the stock's bouncing up against resistance. So when I see that, it tells me that it's possible for the stock to hit that resistance level and come back down. All right, it's already been as low. It opened here. It drifted down to right around there, 43, which incidentally is support. And now it's making a run at 46. All right, so what I'm concerned about is that this could happen. Now, before I make any calls on this one, I'm going to go into finance.yahoo.com and I'm going to type in the symbol, and I want to know, why did the stock gap up? So news is a big part of this. If we scroll down here, we can check this out. So Simulations Plus had an earnings announcement. Okay, let's check this out here. Reported fiscal 2024 earnings of 20 cents per share, unchanged year-over-year basis. The figure topped Zach's estimate by so they beat their estimate by 11%. Top line revenue increased 16% year over year to 18.3 million, driven by higher software revenues in the clinical pharmacology and pharmacometrics. Never heard that word before. And they beat that too. So following the results, shares are up 9.1 pre-market trading. Okay, so all that's really good news, really good earnings. And so now I'm going to be cautious here. How close do I want to get? All right. So the idea here is let's put up a line. Let's just start playing with some lines. The closest I would get is the first strike below this blue line, which is the 200-day average. Again, look, it doesn't want to get above 46. It could come back down. So ideally, for me on this one, I would sell at 40. So my line in the sand that I like on this one is 40. So notice how conservative I'm being. I'm not going up to 45. I think the stock's going to be above 45. No, move further away. Just like a sniper in wartime, you don't want to get shot. So move your short strike as far away as you can and make 10%. So I don't love this one because of the 46 resistance. It could hold. So then I can just go take a look at the live trade prices here. And let's pull it up here and to see what's available at those levels. All right, so I've got this spread shown here. And I'd have to get, if I got up to 40, there's 35 cents credit on a $5 spread. So let me show you where 40 is on here. That's where I want it. So the question is, am I comfortable with the stock staying above 40 between now and expiration? Yeah, not like yes, but I don't like 46 resistance. What happened last time? It hit 46, it came down below the short strike. So as much as I'd like to snipe, one of the things here on snipe this one of the things about trading this system is you want to be really conservative. 10%, all I want. I don't want the stock moving against me. I want everything lined up perfectly. There's nothing to stop the stock from rising. I don't see that. And so for that reason, I'm going to hold on this one, pass on it. If the stock does, in fact, here it is, it's breaching 46. If it starts making a run, and I'd give it about half an hour, maybe an hour. If the stock is making a run, then I'd come in and look at selling a 40 underneath here. So that's not ideal. It's an interesting setup. Now, one that I do kind of like here is on Conagra. And what's beautiful about Conagra, let me show you the news on this one. So they came out with earnings. They were mixed amidst strategic investments and cost savings, but they raised their future guidance. Sales in line with estimates, stock soars. Let's take a look here. Check out the news here. Let's see. So their revenue was $3 billion so their revenue was in line. Their earnings per share was higher than estimates, 6.2. They increased their full year guidance for operating margin to 15.8%. All right, so that's good. I like anything about raising future guidance that tends to propel stocks higher. So I'm liking this one for those reasons. And so let's look at a chart on Conagra. We're going to go a little bit later today since I had technical difficulties. So the question is now, where's my line in the sand? Now, the 200-day average is one of the strongest moving averages on a chart. That's the blue line. I want to sell underneath that. And I'd say no closer than 29. So let's draw a line at 29 here, roughly at 29, just under, let me move that. Right about there is 29. Right there. Now, 29 would be as close as I would get on this one. And why is that? Well, the stock's going to have to come back down below 30 right here. So 30 is resistance. Let me draw that line for you. And so you can see better what I'm looking at. So I think it's going to stay above 30. In fact, it could stay above this resistance level here, which is 30.50. All right. So I wouldn't go any you could go there. That's support that should keep the stock from dropping. You've got support at 29.50. Look at these bars here. And then we got the 200-day average. And then we got our 29. Look at 29. Resistance here. Resistance. Support. Resistance, support here. It bounced just yesterday off 29. All right, so that's a decent place to sell right at 29. Now, are there any, let me get rid of the other lines so it's a bit more clear. Is there any premium above 29? That's as close as I want to get. Let's take a look. So then I type in the symbol and I just see what's there. I like to go out about 15 days on the options, sometimes less, but let's check out 15 days. And once again, so I can make sure I don't make a mistake, I want to sell at 29. And then I go find 29 here. And I'm seeing only 2 cents credit. All right, this is another one that I would fish on. I'm going to ask for 10 cents. The mid price is only 2. I'm going to do, this is a 50-cent spread. Let me do this. I'll do a 1-point spread to see what we can get for that. Let's keep it as simple as possible. There's a 2-cent credit available on a $1 spread. I'll ask 10. And if I do 10 cents on a $1 spread, just like the trade on Levi, my risk is $90 a contract, 90 cents times 100. And I do 5 of those. and I know my max risk is 450. Therefore, 5 times 90 is 450. So I can pull in $50 and risk 450. I'm going to confirm and send, and I'm going to let this trade come to me. So in order to get filled on this, the stock's going to have to come down a little bit. It already has. It comes down, maybe down to 30. We have a good shot at getting filled on Conagra as well. So right now what I have then is I've got 2 orders in. We may not get filled today. That's just the way it works sometimes. I've got these orders in. I'm waiting for my 10 cents. I'm either going to get it or I'm not. I'm going to be patient. I'm going to let the trade come to me. And maybe this week we don't get any trades, but that's fine because earnings season is approaching. The end of this month, I'd say in about 2 weeks, there's going to be plenty of opportunities all through the end of May. So we're going to fish. We're going to wait and see what happens. That's all I got for today, everybody. Thanks for joining. Have a great week, and we'll see you next week at 9:15 Eastern, and I'm sure we'll have some other trades to play with. Have a great week, everybody. Pura vida.